All right, people, welcome to our live analysis session. All right, now I want to get straight into it. Now, for those of you who saw on Friday, I was talking about this trade on gold right here. The price took the low into the order block, broke the market structure over here, and then gave us a return. Now, let me just drop this here. All right, so that's that part here. So when the price returned back into this order block here, now on Friday, the price took the high and dropped back down, stayed in here. We had an accumulation. Now, the price did a really good long. As you can see now, the price has shot back down by quite a bit, which is interesting. Now, it left a liquidity gap here purposefully, I know for a fact. And now the price has come back almost all the way back down to where it started from. Now, I don't want to be so hasty to get in, even though I guess if it went long from here, I wouldn't be upset. But my only thing is that I mean, I like to watch things down to the M1. And if the price closes above this order block range here, I include the wick just for now. Then I probably would buy again. But there is a chance where the price might actually fill the gap because this is a very fast movement back down. Now, again, let me just do something. If you go on the H1 here, I told you that we have a sell order aggregate over here, this range of liquidity. The price has taken one high, it looks like, but I think it just about took the second. Let me double check. No, it didn't. It's just taken this one high for now, and that's about it. Now, from a H4 perspective or weekly perspective, the high of the previous week is this second high right here. The price has come really nearby and done this movement here. Now, what I'm hoping for is that the price will come back and fill this gap and give us another chance to get in again. But as I said, it might even take the lows right here. But I'm not going to get into gold here. And this is one reason why I guess gold has been so annoying because of the way it's been moving. Okay. Now, the one thing we can say for sure is that this H1 supply order block here, this range around here is very, very powerful, very strong. But I want to see what the price does if it's going to fill the gap. I'm literally going to put an alarm right here. If the price fills the gap and maybe even takes the low, then yeah, I'm going to go for it. And as you can see, guys, look, the price has gone to this supply zone and reacted the way it has. I don't trust it 100% yet. All right. That's my thing right now. So even though I know the price looks really good and right for a trade, I don't want to take anything yet. Now the US 30, which is my second love, uh, we still got about 2 days left until Wednesday. Let's just say Thursday, because that'll be a new market week or new market month to see if price is going to close with the body of the candle above this high or below. If it's above, then we'll continue it long. If it's below, though, we do have a chance to repeat over here. Now, I was saying to the WA students this afternoon, WGS students, that to be fair, we had a similar scenario 2021 into 2022. The price closed above this high and then gave us a short. Now we have pushed higher, yes, and the body of the candles closed above this benchmark point right here of the high of 2022. But if we have the same pattern, then we could see one more short. Now, for me, I do see that the US 30 has one more major short at least to do. My reasoning is because this order block here still hasn't got a return in it. We still have unfulfilled efficiency, and this low didn't return back to the order block. So at some point, we should get here and get some sort of short, a big short coming in. For now, though, we haven't had that yet. Now, in more detail, for those of you who are watching the US 30, I'm not trading it yet, but there is one demand order block here, this D1 demand order block, which I was saying to you guys before the price did this massive takeoff that if the body of the candle breaks beneath this area here, right, and returns to the other side, I will be looking for a major short to fill all this liquidity void because especially these equal lows here, I've been watching them for quite a while now. These ones right here. And even the way the price opened and closed here, we still have a gap here. The price has got at least ripeness to come back down here, even if it doesn't want to do the full measure of what I was saying, which is down to 32. That means we have multiple chances to get some really good trades in. So my hope is that the market actually offers us this amazing opportunity at some point, and we can get some price action going, and we can get some sort of trade. But I'm gonna wait for the price to to do something around this area first. If it doesn't, then I'm not going to trade it. Okay. Now, from a day-to-day point of view, what I can say is that because we're in new price territory, which I mean there's nothing to the left here at the same current price level that we can use as a price reference. So everything we're looking at right now is literally based on the price action of as we go day by day and week by week. Okay, the best we can do is use previous yearly highs and etc. as reference points, but above this high, really there's nothing to the left that we've ever seen before. So the price behavior is going to be on a day-to-day basis, which is good at the same time because you could get some good trades from that perspective. Now on the H4, speaking about that, the highest point of the market so far in the US 30 is this high. So right here at this high right now, I want to see how the price interacts with this high. If we get a potential reversal signature, then I'll be getting myself ready to see if there's anything there. If not, then we will leave it alone. Now, this week we have the NFP news and we have the ADP news and we have the interest rate decision on Wednesday. So there's a lot of high impact US news. We have a lot this week, okay, at near the end of the month. So that means that we have opportunity for some really bad boy trades and opportunities there. So, speaking about that and looking at that, what I would say is let's see what we get coming forward, on the US 30 as time goes on. All right. Now with the major pairs, Euro, USD, and etc., they're all pushing short. I was expecting the price to fill this liquidity void and get here, and it's done so pretty nicely, which is so nice. But I think for today, I'm not trying to trade anything just yet. AUD/USD is kind of an interesting piece of price action because we've been in a range. This is probably one of the best accumulation ranges I've seen in a while. Price has been in a range for a good while now. So my thing is that I want to see if the market is going to give us the Judas swing and then the trade. Now, there's also a lot of high impact US dollar news as well. So, I mean, Australian dollar news. So that can also add to the analysis. But for now, looking across the pairs, I think that, as I said, this year I'm sticking to major pairs only. There is good opportunity to grab some good opportunities. Now, in the morning, there wasn't complete correlation between the dollar index pairs. So AUD/USD was doing its own thing, pound/USD was doing its own thing. But now gold has kind of come in line and started to go short now, which was the one that was a bit off. USD CAD and USD, well, USD JPY is still not really, but USD CAD is kind of followed through with USD CHF and they're going long. So we have some dollar correlation going on here. And it happened as soon as the US Open for the stock market happened at 2:30. All right. So, with that being in place, that did help a bit. Now, across the crypto space to check to see what's going on, the dollar seems to be having some strength for the day because they're even pushing short as well. But again, it's still one of those things that on a Monday is better to be an analyst than to just kind of go full throttle in. Now, gold has also silver has followed suit and done this big short. Now with silver, I think we could have analyzed this a little bit better this afternoon, but I didn't look at this on the weekly, but we have equal highs here. And the price is simply just taking the high of the previous week. And so I do expect it to close the gap and start going short. Now there is a slight delay between gold and silver. Gold has already, hasn't gone to the gap. Silver's very close to it. The gap that was left this morning here. Slight gap, but it's already actually closed it off. But with gold, we haven't got that just yet. So I'm interested to see what is going to happen here with gold because that drop was massive. And I'm kind of glad I didn't rush to get in because all throughout today, if you can imagine, I was holding on to gold faithfully for quite a few days. It took the high and came back here. So if I'd held on, I guess I could have got this number of pips, but then I would have lost most of them without even realizing because this happened so quickly and I was about to go outside to go and do some food shopping. So it's actually good that I didn't get involved. And sometimes in the market, that's why it's good. I think this is a good example of why you shouldn't rush because the price can come all the way back down to your entry in seconds and you won't even know. But if you rush, you could get, if I got in anywhere in the trend trying to capture something, my idea was to get in here. I guess I would have got something, but I wouldn't be looking to get out. I need to be honest. I probably would have been at break even or something, and all the profit I made would have got wiped out immediately. And depending if you're on a prop firm, some prop firms, they calculate your floating profit sometimes as losses. So that would have been great. Okay. So for now, looking at these pairs, crypto doesn't seem as affected as the Forex markets do. Seems like the reaction happened on oil as well. So that general US dollar correlation is there. So, knowing that, let me just do something here. All right, so what I'm going to do, I'm going to quickly go over and take a look at the news and also the dollar index as my last piece of analysis for today. And I'll take it from there. All right, so let's take a look at the dollar index first, and then we can look at the news after. All right, so if you look at the dollar index here, I'm gonna zoom out to the weekly first, and then after we'll take it from there. So if you remember from the weekly analysis, guys, I told you the dollar index has these equal highs I'm expecting the price to take. Now, my only issue that I really, really don't like about what the dollar index has done is that as the price moved up long, and I've checked this on every chart, for those of you first time watching, we did an analysis and we looked at all of the dollar index charts that are available to look at or specifically on TradingView, and all of them have this liquidity gap. None of them have been filled out. So my issue is that even though this looks like it's ready to break out into a very strong trend long, it's left a major critical liquidity gap here where it's broken this supply order block, closed above, should return to the other side to flip the zone and then start going long. But instead, the price came near, very literally to the ending of this gap, decided to push back up and stay in this demand order block that's sitting here. And now it's pushing long again. And that's my only issue. Now, I hope that the price will come back down short first during this week with the high impact news we have all across the board and then go long. But if the price goes long first, I know that this trend at some point is going to experience a pullback. It's just when, I don't know. That's the only thing. So transforming that into what we've got for January 29th to the end of the week, which will be February the 2nd. Let's look at this week's news to see where we can map things. Now, for right now, we don't have any high impact news on the market. Whatever happened with the dollar pairs is literally just the stock market open, US stock market open. Now we have Australian news, which could help to break the Australian dollar, US dollar out of that accumulation range that it's in. You've got European news in the morning, but my focus is really US news, which on Thursday. Now we do have more Australian dollar news, so I'm actually going to be watching Australian dollar because it might actually provide some really good opportunities outside of other pairs, because there's a lot of high impact news on it that will definitely disturb that accumulation range, or in other words, will be used to provide the necessary means to turn the accumulation range into a trend at some point. But on Wednesday, we've got the ADP news, which is the precursor to NFPs. We have the interest rate decision at 7 o'clock, plus the press conference at 7:30, both on the same day. Then on Thursday, we have the pound news, which is going to be crazy. Actually going to be crazy. And we also have some more high impact news from the US dollar on Thursday. And then on Friday, 2nd, here we go. We have the NFP. So we have a bunch of and we also have the Michigan consumer sentiment, which I consider to be high impact. The only thing is, because it's way above 50, it's become medium impact, because unless this is going to drop down to a significant number, the consumer sentiment is high right now for consuming. Okay, so people have trust in the economy. And my thing is that I do think that the economy has been propped up by false figures and numbers and moving adjustments around. But the economy in the US is not as strong as it's claiming to be. But for now, anyway, this will stay medium impact because we're very close to the top upper quartile or above the upper quartile for percentage wise. So I don't expect it to be any problems there at all. So having that in mind, there's a lot of US dollar news that the price could use in order for us to get some sort of price action movement. But again, I said I'm basing my trades on the dollar index. So I'm watching to see how the price is going to behave week by week. At the moment, the price looks like the new week is going to be taken. If we use the whole order block here, because it takes a whole week to know what's going to happen, we're going to be looking at things intraday, so day by day. And at the moment, we still have a strong bullish movement happening here. For me, as I said, if the dollar is going to change direction, I want to see a close beneath this demand order block. So this intermediate demand order block inside of the larger weekly area, if the price closes beneath it, then we're definitely going short. And of course, with high impact news like what we've got, the market can do a whole host of things. Okay, but I think for Monday, it wouldn't be smart to try to jump in because as you can see, with the things that gold has done, like what we just had here, you know, it wasn't really expected right now. And you can see that that small little 1 minute zone. That's why I try to tell you, if you want to know why I know this zone so well, from my bad experiences of trying to capture a falling knife, I've known that there's an M1 order block that usually sits to keep the price pushing any lower. And so as you can see, the price is respecting it. You know, I've had my fair share of pains from gold, trust me. So right now, I'm just really for looking at what the price is going to do. When I keep these, I've got the alarm here. I'm watching this area here. This is where the liquidity gap is. In fact, let me just use a box instead to make things easier. Let's take that over here. All right, so I'm just watching to see what happens here. I've got an alarm. It would be nice to see if the price takes the low because at the moment, this demand order block is where my concentration is of where price is operating liquidity from. So if the price just fills the gap here, I'll give it a few minutes or a minute or two to see if it's going to push any lower. If it just fills the gap and keeps on going long, then on we go. If not, I'll see if it's going to take the low and then go long. Okay? And that's really about it. So I'll catch you guys later.